Listen carefully. If you're hunting for the next major winner in 2026, the kind of stock that could genuinely change the trajectory of your portfolio, then you need to stop following the crowd. Because here's the harsh reality most investors don't want to accept. The majority of people are chasing the exact same names, overcrowding the same trades, and then wondering why their returns keep shrinking year after year. That's not how wealth is built. That's how opportunity quietly disappears. Now, let me be very clear before anyone misunderstands me. I'm not saying the biggest winners from the past few years are suddenly bad businesses. Some of them are outstanding companies. But markets evolve. What worked in 2021, what worked in 2023, and even what worked last year doesn't automatically work going forward. The rules shift. The environment changes, and investors who fail to adapt get left behind. If you actually want to win in 2026, you need to start paying attention to areas most people are completely ignoring right now. And that's exactly what we're doing today on Stock Ara. In this video, I'm going to walk you through 5 powerful growth stocks that have strong fundamentals, massive long-term potential, and the positioning to deliver exceptional returns in 2026. These are not the obvious names. These are not the stocks everyone on social media is shouting about. These are companies that haven't had their breakout moment yet, and that's exactly why the opportunity still exists. But before we dive in, do me a quick favor. If you're serious about finding winning stocks and improving your investing skills, hit that subscribe button and tap the like button. It only takes a second, but it helps this channel reach investors who actually care about real analysis. Stick around until the end of this video because I'm also going to share 3 stocks that are extremely overhyped right now. These are names getting tons of attention, but when you look at the numbers, the story looks very different. Drop a comment below and tell me which stock you're most interested in, and share this video with anyone who's serious about investing. Let's build this community the right way. Now, before we start, a few important points. This list is not ranked. I'm not saying one stock is better than the others. Each one stands out for different reasons, and I'm not claiming these are the only good stocks in the market. There are plenty of opportunities out there, but these 5 companies have something special. Strong fundamentals, expanding markets, and most importantly, they haven't gone parabolic yet. Their moment could be coming in 2026. And no, this is not penny stock speculation. These are real businesses with real revenue, real customers, and real competitive advantages. They're simply flying under the radar compared to the overhyped names everyone keeps piling into. So let's break down exactly why these 5 stocks could be major winners. The first company is Vertiv, ticker symbol VRT. This is a roughly $62 billion company, so we're not talking about a small speculative play. Vertiv sits at one of the most critical pressure points in the entire artificial intelligence boom. They specialize in power and cooling infrastructure for data centers, and this matters far more than most people realize. Everyone focuses on chips and GPUs, but the real limitation in AI today is power efficiency and cooling. Without it, none of the computing power matters. Vertiv is selling the essential tools of the AI gold rush. As demand for AI explodes, data centers must scale, become denser, and operate more efficiently. Every one of those data centers needs Vertiv solutions. The total addressable market for this space could reach $70 to $90 billion annually by 2030. Right now, Vertiv is generating about $9 billion in revenue, leaving massive room for growth. The fundamentals are impressive. Revenue is up about 80% over the past 2 years. Free cash flow has surged more than 400%. The company is becoming more efficient and more profitable as it scales. With a forward PE around 34 and minimal short interest, this is a high-quality growth business trading at a reasonable valuation. Next up is CrowdStrike, ticker symbol CRWD. This is a cybersecurity leader operating in a space that becomes more important every single year as businesses move further into the cloud. Artificial intelligence accelerates cyber attacks. Cybersecurity becomes non-negotiable. CrowdStrike protects endpoints using a subscription-based model that generates recurring revenue. They control roughly 20% of their market, which is an incredible position. As AI makes cyber attacks more advanced, companies must invest in stronger protection. CrowdStrike's platform becomes more essential with every passing year. Revenue has grown more than 120% over the past 3 years. Free cash flow continues to expand, and the balance sheet remains strong. While the forward PE looks high, the company has only recently reached profitability, meaning it's still early in its earnings expansion cycle. A third company is Arista Networks, ticker symbol ANX. This is a $165 billion company that somehow still doesn't get the attention it deserves. Arista builds high-speed networking equipment for modern data centers. As AI workloads grow, fast and reliable data movement becomes critical. Without Arista's technology, large-scale AI infrastructure simply doesn't function. Arista controls about 20% of its market and benefits directly from the expansion of AI data centers. Revenue is up over 100% in 2 years. Free cash flow has exploded, and the company carried zero debt with billions in cash. With a forward PE under 40, this is an exceptionally well-run business positioned perfectly for the future. The fourth stock is Zscaler, ticker symbol ZS. Zscaler focuses on cloud-native security, controlling how users securely access applications and data. While CrowdStrike protects endpoints, Zscaler secures cloud access. These companies are complementary, not competitors. As businesses abandon legacy firewalls and move fully into the cloud, Zscaler's role becomes mission-critical. Strong revenue growth, expanding free cash flow, and a massive market opportunity make this a compelling long-term play.